Hi guys, it's Stock Curry, and in today's video I'm going to let you know what to expect for the CPI inflation numbers coming out tomorrow. I've also got new price predictions for Disney, Meta, and Palantir, and an update on Disney earnings. So let's get into it! Okay, CPI inflation numbers are being reported Thursday before the market open. CPI is expected to come in at 7.2%, which once again would be the highest inflation rate in 40 years. If the CPI numbers are higher than 7.2%, you can expect the market to sell off, since that would give the Fed more reason to raise interest rates faster. If the CPI inflation numbers come in at or below 7.2%, then you can expect the market to rise on Thursday. Now, the Fed is widely expected to raise interest rates in March. The question is by how much? The markets are currently pricing in a 70% chance of a 0.25% rate hike and a 30% chance of a 0.5% rate hike. That means if we do get a 0.5% rate hike in March, then we can expect the markets to drop some more. But if we do get a 0.25% rate hike in March, then the markets might actually rise a little. Obviously, the CPI inflation numbers that come out tomorrow will give us a better indication as far as how much the Fed might raise interest rates in March. All right, let's get into our three stocks with our updated price targets, including Disney, Meta, and Palantir. But before we do, I've had some questions about what platform this is that I use in my videos, and I want to let you know this is the Webull platform. Webull actually has an offer going on right now where when you sign up using my link in the description below and deposit just $1, Webull's going to send you 3 free stocks worth up to $3,300. Also, when you make your first crypto trade on Webull, they're going to give you $5 in free crypto on top of that. And if you are interested in moving your account from Robinhood over to Webull, Robinhood did charge a $75 transfer fee, but once you actually transition your funds and stocks and options over to Webull, Webull will actually reimburse you that $75 transfer fee. So don't worry about the $75 transfer fee that Robinhood charges. If you want to switch over to Webull, you can, and you can get that $75 fee reimbursed by Webull. All right, let's get into these 3 stocks. Okay, the first stock we're going to talk about is DIS. This is Disney, and DIS reported earnings after the market closed on Wednesday. DIS beat earnings expectations, and the stock rose over 6% after hours. Specifically, DIS beat Disney Plus subscriber growth estimates and added nearly 12 million subscribers last quarter. DIS also beat on park estimates, with revenue reaching $7.2 billion last quarter, which was double what DIS generated last year in the same quarter. Total revenue was $21.82 billion versus $20.91 billion expected, but the big beat was their earnings. DIS reported a profit of $1.06 per share versus only 63 cents per share expected. Amazingly, DIS said they still have not had recovery in sales at their U.S. parks from international travelers, so U.S. park revenue is still about 20% lower than where it will be once international visitors start returning to Disney's parks. Disney's international parks are still operating with limited capacity due to ongoing COVID restrictions, which is also hurting sales. Disney also said domestic box office sales have not recovered from the pandemic, and their retail sales are also lower due to the pandemic. So altogether, DIS had a huge earnings beat with plenty of room to increase revenues once things return to normal post-pandemic. So altogether, that leaves DIS with a current PE ratio of around 37. Based upon their expected revenue and earnings growth from things returning to normal post-pandemic and their increased subscriber growth of Disney Plus, I now think DIS is trading at a fair price. At $160, it's neither undervalued nor overvalued. I think $160 is a fair price on DIS. In the short term, however, there's no telling what DIS will do. It's a bit of a gamble right now. Even StockMo said that while he plans to buy more DIS, he's waiting for the dust to settle before buying in. Next up is FB. This is Meta Platforms, formerly known as Facebook. Joseph Ho gave his analysis and price targets on FB today. He acknowledged that FB had terrible earnings, having lost 1 million daily active users, missing profit expectations, and seeing a 6% decline in operating margin. Now, a lot of that was due to Meta's transition into focusing on the metaverse. Joseph Vogt said it will take time for those changes to show up in FB's earnings, and he does expect FB to continue to struggle throughout the rest of 2022. Fundamentally, though, FB now has the lowest price-to-sales ratio of any of the publicly traded social media companies. It is also trading at one of the lowest price-to-sales ratios in the history of the company and at half of its 10-year historical price-to-sales ratio. And just using price to sales, Joseph Ho came up with a 5-year price target of around $600, which would represent a little more than a 20% annualized return. Based upon that, Joseph Hogue is bullish on FB long term and said now would be a good time to buy in. As I mentioned in yesterday's video, I thought $223 would be the bottom for FB unless something else happens with bad earnings next quarter or an overall market downturn due to higher than expected interest rate rises. Next up is PLTR. This is Palantir, and they're a data analytics company. Tom Nash reviewed PLTR now that it is down to almost its direct listing price of $10. Tom Nash said any price under $35 is a good price at the current time, and any price under $25 is a safe, conservative price to buy in at. Tom Nash gave his bear case scenario using a DCF based upon a 21% tax rate, a 10% discount rate, a 4% growth rate, and an 18x EBITDA multiple. In that extreme bear case, Tom Nash came up with a 1-year price target of $24.46. That represents a 76% upside potential based upon Wednesday's closing price. Now, regarding the valuation, a lot of people are concerned about PLTR's price to sales ratio of 22. Tom Nash pointed out how other stocks in the same industry have higher price to sales ratios. CrowdStrike has a price to sales ratio of 46. Datadog has a price to sales ratio of 77. And Snowflake has a price to sales ratio of 149. Amazingly, even though Snowflake has a price to sales ratio of 149, Warren Buffett just invested in them. So if Warren Buffett thinks Snowflake is a good investment with a price to sales ratio of 149, how does Palantir look with a price to sales ratio of 22? And of course, sales are growing. PLTR has 3 years of revenues locked in already, and they continually add new customers. Now, Q4 earnings are coming up next week on Tuesday, February 15th. So we'll have to see how Palantir's Q4 earnings affect their growth targets. Analysts will be looking for growth in PLTR's commercial customer base, as well as growth beyond the United States. In the past, PLTR has consistently beat earnings, so there's no reason to believe they won't beat earnings again this time. And with the share price significantly beat down over the past few months, there's a good chance PLTR will rise after earnings, although of course that is not a guarantee. We've seen plenty of stocks beat earnings and yet still fall in price post-earnings. Now, just a reminder that nothing I talked about today was a recommendation to buy, sell, or hold any asset. These are just my opinions, which may or may not be right. Please go do your own research before investing in any asset. Alright, I hope you enjoyed the video and got a lot out of it. Just a reminder that I do have a free Discord that you guys can join. So if you want to be part of a community where we talk about stocks, options, and crypto all day long, you can come join the free Discord. You can just go to stockcurry.vip/discord. There's just a real quick application you got to fill out to get in. Truth is, the application is just there to prevent scammers. Everybody who applies is going to get approved. And as a reminder, if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $1, Webull's going to send you 3 free stocks worth up to $3,300. Also, if you're not a US resident or if you're looking to trade OTC penny stocks, then I do recommend Interactive Brokers. Interactive Brokers is a highly discounted trading platform. Trades start at just $1 Canadian, $1 US dollar, 4 euros, or 6 Australian dollars, depending upon where you live. And both Webull and Interactive Brokers both offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, finally, I do want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.